All right, joining me right now is Bullseye Brief author Adam Johnson, along with Payne Capital Management President Ryan Payne. As we watch a market at 19,960, everyone, people are saying, look, it's going to hit 20, and it's going to potentially go far beyond that. And they are crediting Donald Trump with this. Lower taxes, less regulation. This is the kind of stuff that investors love. All right, so with that in mind, when is 20K going to happen? And why is it that in the scheme of things, even though, Adam Johnson, we get so worked up about 20K, 20 is actually not the number that we should be watching for?
23,000 is the number we want to watch. That is 15% higher than 20,000. And I'll tell you how I come up with that. It's real simple. Donald Trump, if he is in fact going to lower the corporate tax rate down to 20%, and remember, we have the highest tax rate in the world, he lowers that by 15%, you're going to lift corporate earnings by 15%. 20 is too low. We're going to 23,000, Trish. That's exactly why. He's unleashing a whole new opportunity.
You're shaking your head no?
Oh, no, I was agreeing. Sorry.
No, you agree?
Yeah,
okay.
No, I'm bullish. I'm bullish.
So you think 23,000, I mean, what's the time span on that? I mean, if you're also in the bull camp.
I mean, if I could give you, I can't give an exact date, but I just think that, to your point, surprises are probably in the positive. I still think, if you look at the economists at the major firms, they're still a little bit negative about what's going to happen. Anecdotally, my clients are still a little negative, and they're bullish signs. I think, surprises are in the positive, not the negative.
And what are the bullish signs? Just that we're going to get this change in policy?
Trish, this is the most bullish, the most exciting, dynamic time for America in 8 years. This is the most bullish event that we are seeing out of the White House since the New Deal.
Wow.
You got to go back to FDR.
So I just want to point out, you sound a lot like Ken Langone, the founder of Home Depot, who was on this set sitting in your chair just the other day and said he is the most bullish he has been on America in 25 years.
Yes,
and
with good
Donald
reason.
Trump.
Think about Ray Dalio of Bridgewater Associates, who very aptly said...
Big hedge fund guy.
Yep, big hedge fund guy, one of the largest hedge funds in the world, who said, quote, Donald Trump is... reinventing the architecture of the world. You look at the Taiwan phone call, which completely throws out 40 years' worth of a closed-door policy with China. You look at what he is effectively doing for corporate America with cutting regulations, right? We're going to get rid of 2 regs for every new reg. Lowering tax rates for not only corporate America, but hardworking people putting more money in their pocket. You give one person $1, that dollar circulates 8 times through the economy.
Okay, all right. So I'm just going to play devil's advocate. You know what? I agree with you guys, and I'm actually very bullish on America and very bullish on the market right now. But for the sake of the bears out there, someone's going to take the role. I will take that on. The concern, Ryan, is that interest rates are going to go up way too fast, way too soon. And once that happens, it acts basically as a retardant on the entire economy and on the markets. And people are not going to be able to borrow as much money, and they are not going to be able to build as much as they maybe think they can, because the cost, frankly, is just going to go up too much. What do you say?
Well, I think the counter argument is everyone already thinks rates are going to go up. I would argue that rates are probably getting ahead of themselves. Because if you look at it, I mean, the economy is growing. I mean, we're not in ultra growth mode right now, right? I mean, basically, we're kind of chugging along here. Growth is good. The market loves to see growth, even if it's slow growth. But I don't think there's a magic wand that we're going to be in ultra growth mode tomorrow. So for that reason, I just don't think rates are going to skyrocket here. We've already had a big move in interest rates. I'd almost argue that we might see rates come back a little bit just because they've moved so much. And I think that...
so much? Come on. I mean, what are we at, like half a point now?
Rates are...
From where they were, though, Trish.
Are still within 75 basis points of the lowest they have been in 40 years.
True.
You could take rates up another 100 basis points. We could have the big bad Fed, Janet Yellen's like the big bad wolf on Wall Street, and raises rates another 100 basis points, and it's not going to make 1 ounce of difference because rates are so artificially low right now. They're already being held down. Again, raise them, that's just fine. It's a sign of growth. And by the way, if you go back, actually look at the past 4 times that rates have gone up in the past 40 years, it's been very good for the banks because you have rates are going up because you have the banking stocks
right now. Amazing. What is Goldman up about 20%? I hope you're right. I like this scenario. 23,000. That's what we're going to watch for. Adam and Ryan, good to see you guys. Thank you for coming in.